In the last 6 months, Tesla shares have gone from roughly around $200 to $900. This has got the entire internet and the media talking about Tesla going berserk, which has also led to some analysts saying that this is defying all patterns and statistical data that they've ever seen. So why are the Tesla share prices skyrocketing? Is Tesla performing really that well, or are we just seeing a herd mentality for people trying not to get missed out? Let's do a quick status check on where Tesla is financially. Well, Tesla declared in its 2019 Q4 quarter report that it had made a $386 million profit. Technically, over the year, it had still made a loss of $862 million. Compared that to the previous year, it is still an improvement. The previous year, as in 2018, Tesla made a $1 million loss. And in 2019, it was just over $800 million. So while Tesla is still a loss-making business, it has started to reduce its losses. Tesla's annual net loss for 2017 was around $2.2 million. Net loss for 2018 was just over $1 million. If there's going to be any confidence on the company, it should have been last year, considering that Tesla cut its losses by 50%. That was just while selling its most expensive cars, the Model S and the Model X. The turning point for Tesla came when they actually started rolling out the Model 3s. Quoting Tesla's 2018 annual report, in the past 2 years, Tesla vehicle sales have accounted for all of the electric volume growth in the US. Even with the radical EV growth in the second half of 2018, EVs still account for just 2% of the total US market, and there remains a substantial opportunity for EVs to continue to gain market share in the US and globally. Consumer purchases have demonstrated that EVs are becoming a preferred option, as EVs in Q4 2018 outsold hybrid electric vehicles in the US for the first time in history. This is where we have to know EVs are still just 2% of the total US market and less than 2% of the global auto market. In 2019 alone globally, there were 70 million cars were sold and less than 2% of them are EVs. So we're really scratching the surface on the EV market. Now this is where we can start looking at the ARK report about Tesla. Analysts from ARK indicate that the Tesla shares would be worth $7,000 in 4 years, with a bull case of even up to $15,000. That is ridiculous. But can it really be that worth? Well, this is what they're thinking, and this is what they're saying, why it'll be worth. A lot of the prediction is pinned on autonomous driving capabilities. The analysts even quote that when the Model S launched 3 or 4 years ago, there was nothing in the market that would even compare closely to that vehicle. And interestingly enough, there is still nothing in the market that compares to the entire Tesla fleet. Mercedes, Porsche, Audi, Volkswagen, and all the top European luxury brands are just coming up with their EVs and have committed to more EV fleet in the next 10 years. But is that too late? By that time, Tesla could actually have an entire fleet for every price point, and its full self-driving autonomous driving capability could be fully matured. You have to also take into account the difference Tesla operates against a traditional car company. A traditional car company might actually spend 1 million kilometers on the road, evaluating the car, collecting all the data, and then releasing the model to the public because they want to maintain the brand value. Whereas Tesla, on the other hand, releases a new model with all the hardware and all continuously collects the data at the same time from all the vehicles and improves the software and then keeps rolling it out. The people are the testers. Every Model 3 on road today has the full self-driving hardware inbuilt to it. The users just have to buy the software enablement by paying roughly around $7,000. But the hardware is there. So yes, Tesla is years ahead of the rest of the entire automotive industry. And Tesla is currently unstoppable with the China plant and their production capability of over 500,000 cars a year. So this leaves us with the very important question: is Tesla undervalued currently? And will the stock, as predicted, will be worth $7,000 or even $15,000 in 4 years or even sooner?